we have Mr. M.S. UNNIKRISHNAN, the MD of Thermax, who joins in. Hi, Mr. UNNIKRISHNAN. Happy New Year. First, since the last time we spoke, there have been many announcements on coal block auctions, GST, ordinance on land acquisition, etc. Do you think that the recent announcements are enough to spur investments in capex, or will the ordinance status of these acts put at risk an overall industry sentiment, according to you?
These are moves in the right direction. It's a pity that a government has got to resort to an ordinance route to pass very ordinary policy changes. That's the state of the politics in the country. That's my comment on that. But I would certainly respect the government, the finance minister and the prime minister, for having taken the bold step to move through an ordinance these changes, which they know fully well that they will not be able to pass through an independent session of Rajya Sabha, and they have to have a combined session of the parliament called to get this through in the next 6-month period of time. So these are not only bold moves, the way the move is taken is even bolder. So that's my comment. Will that spur investment? My suggestion is these are indicators and pointers towards the revival, because there are various other factors which will have to be setting in when the investment cycle is going to be restarting. But I would say these are in the right direction.
Mr. UNNIKRISHNAN, hi, good morning. In the land ordinance, we saw a lot of thrust by the government on industrial corridors and large special projects. Do you think news on order inflows, especially for dedicated freight corridor, will pick up any kind of momentum?
Not in the immediate future, because by the time the notification is put into practice and when government or the agencies are able to procure land, it is going to be taking time. The notification, the moment it comes in, then only people can start utilizing the new law. And this is fairly restrictive also in nature. It's only for public purposes, PPAs, UMPPs and industrial corridors. These are the areas where this is going to be coming into effect immediately. And I would believe that DMIC, the Delhi-Mumbai Industrial Corridor, which is already even financially closed, was struggling for land acquisition in some of the areas, and I'm sure it should give a fillip for it. But for that to translate into ordering of equipments and companies, it would be a long way ahead. And there are now UMPPs currently under consideration or bidding level. So it will only help in the medium to long term. However, for I would say state-owned power plants, NTPC equivalent power plants, this being either public interest or maybe public-private partnership, would certainly have a positive impact given. But the time frame for that also would be a couple of months before, or a couple of quarters, let me say, that people would have acquired land. But avoidance of the social impact angle and a couple of notifications are absolutely positive in nature.
Okay. Fair enough. Mr. UNNIKRISHNAN, we understand that the capital goods industry will also face a rollback in excise duty concessions starting today. Given the overcapacity in the system, do you think there will be any impact? Does life change any way for Thermax?
For the capital goods sector, frankly speaking, even after the reduction of excise duty by a few percentages, we have not seen an increase in ordering. Because nobody would buy a capital equipment just because the price is lower, you can afford it cheaper. They would go only when there is a demand for it. So you got to understand the way the cycle performs for this. Capacity utilization of existing capacity, when it reaches a critical level, like say 80-85% or sometimes even 90+%, many companies in the sectors of cement, steel, power, oil and gas, fertilizer, sugar, these are the areas where people, the existing producers and manufacturers will start getting panicky when their capacity utilization hits a 90+%. Because even if they place an order for a new equipment or a new plant today, by the time it fructifies, it would be at least maybe 3 to 4 years down the line. So they start placing the orders. So if you look at the same today, the capacity utilization of the cement industry is hovering around 65 to 70%. Steel industry varies between a 60 and 65, and in some smaller companies it may be a 75%. because of which there is no necessity for anybody to be placing an order for a new capacity creation immediately. So we need to be waiting for the consumption pattern to be increasing in the country, which I'm expecting things should be changing, because the WPI and CPI are very stable now. Inflation is under control. So the money available at the hands of the consumer has gone up. With that, the consumption should start increasing. Once the consumption increases to this critical level which I mentioned about, there will be ordering out for new capacities. So what is the time frame that we're looking forward to, people like us are going to be looking forward to? If one were to be honest, nothing is going to change in ordering related to capital goods for a year at least. And you would see a spurt of that happening in selected sectors maybe in the next year. Next year when I say is FY17, not 15-16. That's a realistic outlook.
Mr. Unnikrishnan, how have order inflows panned out in Q3? Because we haven't seen too many announcements on the exchanges this quarter.
Being the last day of the quarter and I'm in a silent period, I can't be giving you numbers. There were no major order finalization which has happened in the country for larger projects. That much I can tell you. Nor did you see too much of changes happening in the international market also. So let's talk about our numbers specifically of the company when I'm in a position to do it maybe a month down the line after the board meeting.
Okay, fair enough. Mr. Unnikrishnan, there's also been a slight disappointment on the performance of your subsidiaries. Q2 also saw around a 27% write-off in few investments, and the overall turnaround efforts have been so far unsuccessful. What is the outlook on the subsidiaries for this year?
See, of the investment made by Thermax Group, the largest one is in the joint venture with Babcock and Wilcox, where we own 51%. And the total investment is to the tune of around 800 to 850 crores of rupees. And it's also got a debt of approximately 450 crores of rupees. That is the one which is going to be taking a longer period of time, because that is going to be totally dependent upon the larger supercritical power plant construction in the country. I do not expect a major ordering to restart in the country for the next 24-month period for this industry. So I would expect our joint venture with Babcock and Wilcox is going to be in negative, and in any case going to be under strain for 2 more years. And we are willing to wait for it, because whatever is said and done, there are only 3 existing capacities in this country for making supercritical boilers. The first one being BHEL, second one being Larsen Tubero's joint venture with MHI, and the third is Thermax's joint venture with Babcock and Wilcox. So progressively, as the power story is going to be unfolding, this JV will do well. But for it to be reaching a level of profitability, one should be expecting at least a 4 to 5 years time. But the investment is for a period of 30-35 years, so why should one be unduly worried? We should certainly be worried, but not unduly worried about. That's the main investment in a joint venture or a subsidiary. Other than that, the Chinese subsidiary is an $11.5 million investment, and which is nearing to a break-even in the coming year. So I don't think we are in any way concerned or worried about it. Yes, certainly we have put our German subsidiary, which is a step-down subsidiary of our company, Dan Stoker, which was a loss-making entity right from the time when we purchased the company 4 years back. We tried our level best to turn it around. But with the economic difficulties and various other factors, that is not practical, so we put into administration and certainly taken the losses, taken the hit on the balance sheet. That's the way it is done. It is done as a positive move to ensure that the bleed is stopped. The wound is, if it can't heal, you're going to amputate. That's the way we've taken the decision.
Okay, so let's get back to one of the issues that you addressed. One of your JVs has bid for the NTPC Bareilly supercritical project, which if finalized could be the maiden superficial boiler order for Thermax. If you could tell us the status of that order?
There was a hold on the project, though the bidding process got completed for technical portion, and the discussions were just going to be starting, where there was some certain reasons for which the buyer, NTPC, has put the project on hold. But what we understand right now is that that is removed, and they'll start discussions and possibly it'll reach the level of maybe a commercial bidding in the beginning of next financial year, is our current understanding. There are a lot of uncertainties in some of the projects, but this is a project which I think, in our opinion, should go through in the next year.
Okay, fair enough, Mr. Unnikrishnan. Thank you very much for joining in and talking to us.
Thank you. A very happy New Year to all our viewers and CNBC TV 18 as like our family members.
All right. We wish you the same, sir, and we hope to see a lot more and a more positive outlook from you in 2015.